Say good afternoon. So now I will take up your query on salvage value as whether taxation is to be considered or not, isn't it? Salvage value in capital budgeting and its treatment. What is salvage value? Sale value of or estimated sale value at the end of the project. It is only an estimated sale value at the end of the project. So where I would end up with salvage value equivalent to book value. Salvage value less than book value, salvage value greater than book value. Then salvage value is equal to book value, no profit, no loss. Here I will end up with difference is loss. Here difference is gain. So no profit, no loss, salvage value equal to book value. Therefore, cash flow is equal to salvage value only. Here, cash flow is equal to salvage value plus tax saving on loss. As how depreciation is debited to P&L account, the loss is also debited to profit and loss account. So, to that extent, I am not just strictly applying taxation. In taxation, you have block of assets concept. However, you have some companies where you have the option of either following WDV or straight line method. You call that as terminal depreciation. Any shortfall, either you call it out as loss or terminal depreciation, but the effect is going to be same. Tax saving on loss. Here it is, cash flow is equal to salvage value minus tax payment on gain. This is what we call it out as salvage value after tax. So once when we have done like this, we will get into a world of illusion that in every problem I got to pay tax on the salvage value. Why should I pay? Only when I have a gain, only on the gain I got to pay. No taxation I will be computing on salvage value. It is only on the gain I will compute the tax and I will deduct the tax from the salvage value. Now you ask your question. Is your query sorted out? So you can say most of the problems they have not considered tax. That means it would have been the case where salvage value is equal to book value. What is book value? Book value is cost minus accumulated depreciation. So when I record only my cost, who is there to ask me any tax on that? I will just kick them off. So payment of tax will be there only when there is a gain. When I am recording only my cost, there is a question of payment of tax at all coming up. Tax is not imposed on sale. It is not sales tax. It is only on the gain. Only when there is a gain I have to pay tax. Only on that occasion. So most of the cases might be salvage value equal to book value. That's it. See, AS 12 communicates on government grants. So I think you would have undergone that accounting standards. So there are two opinions that you have. Government grant, I would just deduct from the cost of the asset and charge depreciation on the net cost. So it is as good as I sell off my old asset and my cash outflow is lesser, but depreciation I will charge on the original cost of the asset. That way also you can work out when you have a government grant where you can charge depreciation on the original cost, even though outflow for outflow purposes you may have to deduct. However, it all depends on the treatment in accounting and its recognition in taxation. It is not that I know AS 12 I am just following. That is not by itself will give you the success as far as the tax treatment is concerned. You should also be knowing what is the tax impact on the grant that you have received and how in that particular point of time your tax provisions are. So the best thing is that deduct the grant from the original cost, charge the depreciation only on the net amount. That is the best way of doing things, which is non-controversial and more acceptable, I would say. Okay, so now we will take up on to a new topic. So are you clear about this matter on anything on leverage or something like that? No. Didn't I try multiple IRR? Now I will just do that. Multiple IRR. So we will take up the third chapter, financial planning. Financial planning. Financial analysis and planning. Financial analysis and planning. Chapter 3. This is simply you can divide into two, as one as ratio analysis, the other one as cash flow and fund flow. Financial analysis and planning is the title for this topic. Is the title for this topic. But if you look into the content, there are only two topics you have. One is ratio analysis, the other one being cash flow or fund flow analysis. What is it you have in the case of ratio analysis? What is that we will be studying? So, as far as ratio analysis is concerned, topic is concerned, it has got other name as accounting ratios. So, therefore, instead of calling it out as accounting ratio analysis, we have called it out as financial analysis. And cash flow and fund flow are also required as a budgetary exercise for any entity. Therefore, they have called it out as financial planning. So, logic behind us, how they have titled is financial analysis and planning will be divided into two as ratio analysis and cash flow and fund flow analysis. What is that we will be doing in the case of ratio analysis? So, a plain financial statement may not provide the required decision-making input. Only a ratio will be in a position to communicate for decision-making the inputs. Example, I have two companies. A company has got a net profit of 1000, another company has got a net profit of 100. Sales for the first one is 10,000, sales for the second one is 400. Now, if I have to take a decision to know about the performance of between A and B, I have to select one, whether it is A or B. Which one you feel like that we have got to select? Should I select A company or select B company? Why? How come? 1000 is greater than 100, 10,000 is greater than 400. In both cases, A is better looking, no? Why do you then select B?
Here 10,000 sales gives 1,000 profit, here 400 sales gives 100.
That is what I stated. But I am telling 1000 is better than 100, 10,000 is better than 400. What is the answer for that? You should answer. Sir, for 10,000 it is 1000, for 400 it is 100. Given. So, now I require a ratio. Two related financial figures I will take up. I will express that as net profit ratio. Here it is 10%. Here it is 25%. So, I don't go by the absolute financial figures. Now, the introduction for ratio analysis I am telling. Two related figures should be taken. You should bring out a ratio. Based on the ratio, you have got to take a decision. Are you understanding? What are the steps that are involved? Two related figures should be taken up. How do you know that they are related? How do you know that they are related? M.B. Rajagopalan, how he is related to you? Grandfather. Rajagopalan is a grandfather of Radha. M.B. Balasubramaniam? Don't know. Nephew of your grandfather. Grandfather ku oru thambi. Thambi odiya paiyan. He was my client. Introduced by Radha's grandfather. Prepare? Illa. Through her grandfather, I had a few clients for some time. So, one passed away. Two related figures would mean not this sort of relation. Grandfather, grandchild, not like that. Cause and effect should be there. Ingadicha anga valikano. Anda madri. What is that? So, that is called as cause and effect. So, the two figures should be related. Develop a ratio. Ratio will have some benchmarking. Higher ratio is good, lower ratio is good, higher ratio is bad, lower ratio is bad. Something like that as we have seen in the case of operating lease and finance lease. Accept project criteria. That way you should have net profit ratio when it is higher in the case of B. Therefore, I am selecting B. Here, layman will look at this. What is the CA students are telling? 1000 is better than 100, 10,000 is better than 400, but yet we are selecting only company B. That is the reason as why it is 5% result. Is what a layman will count and go. CA student will not go and cry to other people, no, we are all very intelligent. Intelligence will automatically come to know. These are the three steps that we will be taking in ratio analysis. Okay. What are the types of problems that we will be seeing? We ourselves have got to know the cause and effect relationship, and we are expected to find out ratio. Based on the ratio, we are expected to interpret. That is one sort of problem. Another sort of problem, they will give you the ratio. You may have to prepare profit and loss account and balance sheet. Two types of problems. Cash flow, fund flow, you have a format, you go by the format. Format oriented. This is formula oriented. One is format oriented, the other one is formula oriented. FORM, up to that same. This is ULA, this is AT. One is format oriented, the other one is formula oriented. That means formula by and large is going to be a standardized formula. Very rarely you can have this way also you can use, that way also you can use. Standardized formula is what you have. Let us just firstly start with return on capital employed, return on investment or return on capital employed. What is the formula for return on investment or return on capital employed? The formula for this being net profit divided by capital employed. What is that? Net profit divided by capital employed. This will be further be taken up as net profit divided by sales multiplied by sales divided by capital employed. This you call it out as return on capital employed. This you call it out as net profit ratio. This is to be referred to as capital turnover ratio. What is that? Capital turnover ratio. Are you understanding all of you? Yes or no? So, beside all this, we should also be knowing something about the meaning of net profit, meaning of capital employed. What is capital employed? The money that I have invested, in where and all I have made investment. Just imagine, see, most of the success lies in the way in which you imagine. How a police could crack the case is that he is thinking like a criminal. That is the reason he is in a position to crack the case. What if a person had looted money and what is it you will be doing? With the looted money, what a person can spend? How a person can dispose the money, ill-gotten money? Come on. I already asked this question once before. So, person will go for foreign trip. So, you can tell any nasty thing also. Just don't worry about that. Buy land. Then, while I was just having two-wheeler drive, I was only thinking what a person would do with money. He will have food. Our friend will go to mall. Purchase. Person who is having food, no? How long he can eat food? How much he can eat food? Limited only, no. How long you can just go for, what should I say, shopping? All malls in Chennai you would have shopped, that's it. There is always a saturation point. A person wanted to see cinema. 2 hours later they will drive you out from the place. Buy another ticket, one more show, that is only for 2 hours, 3 hours only. Or take cinema. One hero, one heroine, music director and a director only. How long? 3 months, 4 months, that's all. After that, stand for MLA, MP, only for 4 years, 5 years. So, all these benefits are only temporary. All these pleasures what people are looking for, they're all temporary with a few minutes to maybe few years. Correct? This, if you tell, then the person will think that you are an old man. Person having old thinking. Same person will realize after some point of time. If a person had excessively eaten, he cannot sleep also. Even for sleeping also, a person who is liking sleeping, for that he will not get money, ill-gotten money not required. If he has got ill-gotten money, he will lose sleep. I was only wondering. I read one news item, a person who was an MP, not at all connected to politics, but he had become Rajya Sabha MP by contributing only cash to that particular party. He had become an MP. When he was travelling by air, he misbehaved. Nobody protected and he was disqualified. So, whatever money that he had paid to the party is a waste. But even that 5 years also you are not in a position to enjoy. 4 years also you cannot enjoy. So, anything in this world is only temporary. The one that we talk about Almighty is permanent. Many years back people have talked, today also they are talking. So, the best way is that whatever you want to enjoy, it is a philosophical one, whatever you want to enjoy. If all those you are having enjoyment of your own on a personal basis are all temporary only. If you are doing it with all, then the amount of satisfaction others are getting, that gives you more satisfaction to you. Prayers, joint prayers will give you more satisfaction. Selfless service to the society will give you a lot of, what should I say, satisfaction. You cannot measure that satisfaction with any money. So therefore, money is required for a life, but money alone is not required for life. So I was just reading an article as how person had earned, he was a person who was just woodcutter only. From there he became to an MP. Even MP post also he is not in a position to have the full tenure. 1 year and 15 days only. And he was immediately removed from the party membership. So he got into party membership because he paid the money and he filled the form, just signed only the form, not even filled all this. The secretary only filled. He was elected. See, what I am trying to say is that if you visualize how a person will just spend his ill-gotten money, if you trace his practice, you can trace him. Nobody is going to keep that ill-gotten money and spend for religious activities and all that. That is not possible. He will try to use that money only for himself. Therefore, where and all he will go, he will sketch it and send to 2-3 teams or 4-5 teams and you can easily catch him. This is what the police is doing. So, a police is a nice person who is thinking from the angle of criminal only. You as a student should also dream in such a fashion as what and all will happen, that is going to give you lot of inputs. That is going to have an extra edge over others. Correct? Say, sir, no. Capital employed, there are two different ways of doing. One, you can say application basis. As how much money I will be spending. You people are telling foreign trip and all that. Foreign trip, okay, you see Niagara Falls. You see, take photograph, take selfie. What is the next stage? You cannot buy any flat there and see Niagara Falls permanently. Correct? No. It is all only few minutes only. For seeing that, what is the extra benefit that you would be getting? By television also you can get that satisfaction. It's only a waste of time only. Some good deeds also we can do, no? Waste of time. Look into that. Capital employed is equal to application, where application would mean I will put it in the form of fixed asset and working capital. Working capital would mean it is current asset minus current liability. So I would say it is fixed asset plus working capital or fixed asset plus current asset minus current liability. I am using the old terms, not non-current assets and all that. So this is application based. The other base is source base. What would be the source for capital employed? It could be equity share capital plus preference share capital plus reserves and surplus plus long-term borrowings. Correct? If I have these many items in my capital employed, the term net profit is expected to be profit before interest and taxation. The term net profit should be profit before interest and taxation, because in this profit I have interest content also there. In this profit I have the preference dividend content also. In this profit I have equity dividend also. Supposing for the sake of argument, if it were to be equity share capital plus preference share capital plus reserves and surplus only with no long-term borrowings, the term net profit would either be profit before taxation or profit after taxation. Why? Because you have in this long-term borrowings. When you have a long-term borrowing there, when I have eliminated, the compensation for long-term borrowing is going to be your interest. That interest should not be there in the net profit. By chance, if it were to be equity share capital plus reserves and surplus only with no preference share capital there, then it would be profit after taxation minus what? Preference dividend. Are you understanding, all of you? So it should be profit before interest and taxation, or profit before taxation or after taxation, or profit after taxation minus preference dividend. So the term net profit is not a single meaning conveying term. It all depends on the place. Are you understanding, all of you? So how I ask water will be different in different place, even in Tamil also. In open place, when I ask for water, what is it I will call? Honey. If I just ask in a closed community, Jalam. Jal. If I just ask in a home, Tirtham. Different words. Same meaning only. Are you understanding? So therefore, meaning for the term net profit will undergo a change depending upon whether capital employed is inclusive of long-term borrowing or exclusive of long-term borrowing but inclusive of preference dividend, or exclusive of preference share capital and long-term borrowing. If it is inclusive of all, then my net profit should be wider. It should be profit before interest and taxation. If it is exclusive of long-term borrowing, I should exclude interest. If it is exclusive of long-term borrowing and preference share capital, then it should be profit after taxation minus preference dividend. Are you understanding, all of you? What source I have in my denominator, the corresponding compensation should be there in my net profit. If I exclude that, I should also exclude that in the numerator. So cause and effect, I am in a position to show capital turnover ratio. Then here, net profit ratio, we will put it as gross profit ratio, gross profit divided by sales minus operating expenses divided by sales. This you call it out as gross profit ratio. This you call it out as operating ratio. And this one you can put it as sales divided by fixed asset and the sales divided by working capital. The first one will be referred to as fixed assets turnover ratio. The second one will be referred to as working capital turnover ratio. Come on, kindly make note to this extent. These are all turnover ratios. Okay, this is what we call it out as a turnover ratios. Net profit turnover ratio, gross profit turnover ratio, operating turnover ratio, fixed assets turnover ratio, working capital turnover ratio. You need not even tell gross profit turnover ratio. Gross profit ratio is gross profit turnover ratio. But you have to be a little careful. You call fixed assets turnover ratio, but possibly we may commit the mistake of writing fixed assets by turnover. Because name is like that. But it is sales by fixed asset is the formula. Please be careful. Are you understanding, all of you? Now, these are all profitability ratios, or what you can call it out as a turnover ratio. Profitability ratio also we have net profit to capital employed is a profit, net profit ratio is a profit, gross profit is also a profit. So people might just tell this as turnover ratio or profitability ratio also. Turnover ratio is better because everything is based on turnover. Now, on liquidity front, you can say liquidity ratios, or you can say it is working capital ratios, or you may call this as working capital ratio is better. So in this you will have firstly current ratio. Current ratio is equal to current asset by current liability. What is that? Current asset by current liability, ideal ratio is 2. Theoretically speaking, ideal is 2. So lower minimum should be 1.33 is what they call. They put it out as 1.33. That means our current asset should be twice that of current liability, or at least 1.33 times of your current liability. What are all current assets? Current asset is equal to stock, debtors plus cash and bank balance. Plus cash and bank balance. Current liability would mean creditors plus bills payable plus bank overdraft. Here you can say even bills receivable also. You may call creditors and bills payable as accounts payable, debtors and bills receivable as accounts receivable or trade receivable. So this is what we call as firstly current ratio. 2, quick ratio or liquid ratio, not liquidity, liquid ratio. Quick ratio, this is current ratio. Here you call it out as quick ratio, or you call that as liquid ratio is equal to quick asset divided by current liability. Ideal one is 1. Ideal is 1. What is quick asset? Quick asset is equal to current asset minus stock. Why stock is eliminated? Because it takes more time for stock to be realized in the form of cash. Because stock is not only finished goods, raw material, WIP, finished goods. It takes more time for you to change them into cash. Therefore, cash is, that is we are trying to find out how closer we are to the cash. So, you may call this as acid test ratio also. Acid test would mean it is not sulfuric acid or something like that. Acid test means quick test. So now it is going to be an acid test for Modi as how he handles Arunachal Pradesh. Is what we will tell. Let us just see his small move. I will be in a position to judge as whether he is going in the right direction or wrong. So quick asset is that. Sometimes quick asset divided by quick liability. What is quick liability? Quick liability is current liability minus bank overdraft. So why bank overdraft is deducted is that bankers, they don't have a fixed term that I got to pay by 45th day or 60th day. It is only a running balance. Today it may be favorable balance, tomorrow it may be an adverse balance. 3 days back it was an adverse balance, now it is favorable balance and so on. So that is what we are all going to take it up, and very rarely we use this. So generally quick asset by current liability is the one that people use. Next, in the case of current assets you have raw material turnover ratio. What is that? Raw material turnover ratio or raw material velocity. You may just call by different names. So this can be expressed in different ways. You can express that in terms of days or weeks or months or times. In all these cases, the formula is going to be almost the same except for in one particular place. So it is average raw material stock divided by raw material consumption into 365 or 360, or it could be 52 or it could be 12. Whichever way you want, you can express. Average raw material stock divided by raw material consumption into 365 or 360 or 52 or 12. So these are all days, this is week and this being month. Correct. In this case, it is going to be raw material consumption divided by average raw material stock. Next. After this, it is work in progress turnover ratio or work in progress velocity. Similarly, we do have different ways of expression. Not looking nice, no? Here, I will not use average raw material stock. Average raw material stock I will not use. Then average work in progress divided by cost of production. Cost of production divided by average WIP. Correct? Now 5. What is number 5? Finished goods turnover ratio. Number 5. Finished goods turnover ratio or finished goods velocity or inventory turnover ratio, average finished goods stock divided by cost of goods sold. Not cost of sales, cost of goods sold. Are you understanding, all of you? This is item number 5. Next. Raw material over, WP over, finished goods over. Now we will take up on to debtors. Debtors turnover ratio or debtors velocity. Average accounts receivable divided by credit sales. Here it is credit sales divided by average accounts receivable. Are you understanding, all of you? We have done raw material, WIP, finished goods, debtors. Now what is the next one? Very nice. Creditors turnover ratio or creditors velocity, average accounts payable divided by credit purchases. Here it is credit purchases divided by average accounts payable. So matter related to liquidity getting over. Are you understanding, all of you? Make note. Say we have just completed liquidity ratios. See, now we will take up on to capital structure ratios. Capital structure ratios.